Okay, we got the chat up. Let's see, bring this over to the other screen. Get that out the way. Actually, the Telegram, I might need to. Alright, I'm gonna let some of them jump in here. You sent it to the group already, right?
Yeah.
Alright, we'll let some of them jump in. I got that over there. Alright, let's see where we at. Get news up this week. We're gonna do US 2 and 3 star. Let's start with just 3. Us to get a little bit better with this, I'm gonna start posting it on Facebook so we can bring in some more people from that end too.
Yeah, that's what I'm doing right now. Sure, you can go ahead and start it, bro.
Alright, gonna start with news. We got existing home sales today. Um, that's at 9 o'clock. Consumer confidence tomorrow at 10, and Jerome speaks tomorrow at 10. The Fed, like he speaks tomorrow and Wednesday. New home sales Wednesday. Crude oil inventories, which is a weekly deal. Durable goods GDP on Thursday is gonna be the GDP and jobless claims. I think that's gonna be some good data on Thursday. They give us a little bit of clarity on the direction of the market. And core PCE, that shouldn't be too crazy on Friday. Fear greed index, we back neutral. We still neutral, I think. But we pushing in the greed. That's not bad. Um, yeah, we could stay in this range throughout the remainder of July, depending on how everything go in the economy with the war and all that stuff going on. So we could range in this area for a little bit. If things escalate, then we'll probably drop down here to the fear. We get into extreme fear, we should be looking for opportunities in the market for sure. Alright, we're not going. Should we do sector? Yeah, let's see what's going on in the sectors. We'll start 3 months out. The worst performance sector has been healthcare. Best performance sector, technology, which is the usual, and probably I was gonna say communication services, but it's actually consumer discretionary. So yeah, technology's been leading out of all the sectors throughout the market in the last 3 months. Um, with healthcare being the laggard, On the 5 day, let's zero in a little bit. As we go to 1 month, energy's been taking over for the last month. Um, Technology's cooled off, but it's still second. And then we got consumer discretionary. Actually, that's communication services. That's where they starting to pick up. And I want to say within this last week, yeah, they still been up while a few of the other ones have went down. Still got technology up there, energy mainly because of everything that's going on within everything that's going on within the economy, the war and all that stuff. So of course we got a lot of the energy stocks getting some juice, getting some love right now. I think communication services is gonna continue to grow over time. Not necessarily grow, but they gonna continue to shift some bread into the consumer. I mean the communication services sector. That consists of these are some of the companies that had top gains in that sector. Like uh Take Two was up here. Yeah, Take Two. That's who's dropping Grand Theft Auto next year. So probably over the next 6 to 12 months, you're gonna start seeing that you already seen a lot of volatility in Take Two, but it's gonna continue to flow over there. I think Meta is in here somewhere. They probably not at the top right now, but yeah, Meta's in here. You got Netflix, EA Sports. Um, they're gonna be dropping Madden and college football and stuff like that soon. Disney. You can kind of tell why a lot of the money shifting to this sector because the that how are these affected by tariffs and war? They really not. They kind of resilient to that type of environment. So you'll start seeing money flow into these areas because they safer than being in Google's in there too. They safer than being in sectors like consumer discretionary where you got to worry about tariffs. Ralph Lauren, your dealerships, travel, um, retail. You got a little bit of everything consumer discretionary, but a lot of that stuff is affected by tariffs and the war because it affects their chain of supply. I mean, their supply chain. So with us looking at that, we're kind of getting an idea of where we should be looking. I would say communication services is probably gonna be getting a lot of money flowing into that area. Um, Consumer staples is probably gonna stay underwater for a little while longer as well, cause that's retail majority. Um, Targets, your dollar stores, your Walmart, all that stuff kind of flat right now because we undecided. The country's undecided on what the outcome of tariffs is gonna be. So that stuff gonna stay kind of flat. Um, Financials we've been getting love kind of steady over the last 5 6 months. Financials went down 1%. They were down up 1%. They were up 3%, and then the last 5 days they went up. So they kind of been flat on financials. But yeah, I think money's going into the communication services sector, and we'll probably see some going into materials because we're gonna be building out a lot of things over the next 6 to 12 months. So that's my guess. Consume communication services, materials, and utilities. I would keep an eye on those sectors. All right, so moving forward, let's go to some of the stocks that's on our currently on our watch list from the briefing, the morning brief. I dropped that in the group this morning. I'm gonna try to get earlier with that so that we can get those notes out and you can look at it before you even jump on the live market brief. But we got the same ones still on our watch list. LMT. LMT is a stock that we're trading based on the fundamental side, based on the Middle East tensions. That's our that's our plug. That's our gun plug. So that's anytime anything popping off over there, we're gonna see a lot of volatility in this stock. It's honestly been ranging from the bottom. If you were playing these based on like our strategy that we've been testing out recently with the Bollinger Bands, if you have been playing this is on the hourly chart. If you have been playing this coming off the bottom, you catch some nice moves, and it looks like it's dropping in the morning, tapping that bottom side of the Bollinger Bands out the gate, and then rest of the day, right here, it'll flow up to the upside. That Wednesday it popped up here. That was we went to 470 from about 444, 445. So you talking about like a $25 move overnight. We were looking at July calls on July 18 calls on Lockheed Martin. We're getting within that month, so those calls, you're gonna start fighting with the time that's left, the time value that's left in those contracts. So watch that July 18 call that's in the targets to watch, our target acquisition stocks to watch. Watch that July 18 call. You may want to go a little bit further out, and you also may want to wait a little and let it gain, some direction one way or the other, so you can catch it versus trying to chase it and ending up being on the downside of that call. Next one we got is RTX. That's another defense stock. That's why we're staying in it. The reason we're staying in this area, because everything going on with the war. Again, you don't want to chase these. We getting a little overbought. I'm pretty sure on the higher time frames, still ranging on the lower, but yeah, higher time frames we up here on the 4 hour, on the daily. These are stocks that we've had in the market briefing for stocks to watch for at least the last week. And if you look at this is the daily chart over the last week, this is where RTX was going into last week at the close from the week prior. It closed at 141 and opened at 143, and we got up to 148. So during the time that we've been posting RTX and LMT, you could have already made some money on these moves. And that's part of what we do in sharpshooters versus just always telling you exactly what the play is. Everybody's not going to be able to make every play, because depending on how much capital you got in the market, depending on how what your time horizon is, on how long you looking to stay in that position, whether you day trader, swing trader, all of these different plays and opportunities will come in the group. But your goal is to learn how to enter and exit these trades on your own. We don't want to always tell you when to press the button or how to press the button, because everybody's situation is going to be a little bit different. Some people will be able to go with further out strike at the money. It's going to cost more, but it's going to guarantee them to catch, more value throughout the duration of that position or that investment. Now, on the flip side, we will give you direct positions that we are in. That's based on where we currently are able to do with the capital that we have in the market. So, got to get too long-winded on that. I just want to say, if you follow in these positions, your goal is to understand how to enter and exit these positions once we throw you the alley. That's how we do things in this group. So yeah, the next stock, Chevron, another stock that we have been watching at least the past week. And Chevron over the past week has went from 140 and it's got up to 149.5 right at the 200 MA at close last week. and it looks like it's ready to gap above that after the continued tensions in the Middle East. So yeah, Chevron over the past week it opened up. Where did we open up? Over the past week, it opened up here on Monday at 145.50, and then we closed at about 149.50. So we got about a $4 move plus another $2 over the weekend. Again, if you was playing or trading Chevron, we could have called, when did this start? This was the Tuesday. Yeah, you could have caught this move here. I probably wouldn't have traded this on the lower time frames with us already getting to the top of that Bollinger Band, getting overbought on the RSI. I probably wouldn't have risked going into one of those positions because energy had already made this run. The only reason we still running is because of everything that's going on with the war. But energy already made its move. So jumping in now is kind of risky because if things look like they de-escalating, this gonna come down fast. It's gonna come down because it went up fast. It's gonna cool off pretty quick, and then it'll start to find some support once it get probably back down here, maybe $9 to $10 down on the bottom side of those bands. Yeah, 4 hour we're way up here on the RSI. We just been ranging or consolidating up there, so we'll see how it play out. Boeing is one that I kind of like. That's the newest addition to our target acquisitions. Target acquisitions on the market briefing is just the watch list. So this is the newest one on our watch list. Those of you that have been in the group for a while know that this was my first 5-figure trade on Boeing last year, early last year. It was like January, I believe, last year. Yep. Yeah, January last year. When that door fell off the plane and we had this move here. To be honest, I think I caught the very beginning of this move, and I still had more to fall. But I was early in the game. Like I didn't understand the severity of this move. Could have made more money than I did, but yeah, it's just a little backstory on our relationship with Boeing. So I understand how this stock can move based on how things go with it in the economy. With them not really having a major backlash behind that crash that just happened across seas, I think they poised to gain some momentum to the upside. They already bounced on the weekly. That was a nice move here. If you would have caught this, they have bullish divergence on the weekly time frame coming from 131. Boeing got all the way up to 120, 220. It's like a $90 move from April. We are getting up to the top end of that, the Bollinger Bands on Boeing, but I think we'll see continued momentum with Boeing because they gaining their footing back after this whole deal. Back in January last year. I think we can go back to retest these highs. They starting to get their orders back in line. We're broken out of this downtrend. We holding steady above the 200. I would say looking at the daily and the RSI look like it's trying to come down. If we get a retest of this 200 MA, this is gonna be a nice entry point for us. Around 170, yeah, 170. I think that's what this clock means. I think I put a indicator for if we come back to the 200 MA. Which one is that? No, that's for the VWAP. I'm gonna set us an alert for the 200 MA. Yeah, set an alert for that. it'll start going off on my phone. If we get that down here and start tapping that 200 MA anytime soon, it was gonna be in a nice position on the RSI. So that's where we at on our positions to watch. I mean our stocks to watch. May not have positions in those. I'm gonna go over the battle plan, like what we should expect, and then I'll look at some current positions that we in, and then we'll jump off here for the market to start, or the market to go and open up. So our battle plan, the market, we facing volatility in the Middle East, and we got the Fed that's holding rates at 425 to 450, 4.25 to 4.5, with a 16% chance for them to cut in July. I think that's going to increase a little bit. 16% is seen kind of harsh. I think we're going to increase that a little bit. They probably going to have more of a chance in cutting rates in July. He still may hold off because he can, but we got a better chance in July of having rate cuts. Next to oil, they're looking at oil to possibly hit $80 crude. If you don't know what crude is, that's the oil futures. They saying we could hit $80 on the futures, which we ain't far from that. But I think we getting a little overbought on oil for right now. Like without nothing solid stopping or disrupting the supply chain, I don't think we gonna be able to maintain this upward trend, because their goal is always to make oil prices cheaper. So we'll see how that plays out. I'm mad I didn't catch this move because I was down here in oil. If you can see the chart, and we caught a little bit, but it wasn't this. Like this is different, and I'm just getting my feet wet with futures. That's why I don't put futures trades in the group for y'all to make, because this is something that I'm getting acclimated to and gaining a better understanding for, so that I can tell you the right way to trade futures. So I'm gonna make the mistakes in that space, and I'm gonna learn it to where I can pass that information to y'all. But basically, I was in futures. If you was in the group about 3 weeks ago, I got into futures and I got into some oil positions on Exxon and crude futures calls. I was in long futures and calls in Exxon. If you see over that time, these is arrows. These are stuff that been on here on this chart. We were calling Exxon down here around 101. Exxon shot up to 114, and then it gapped up over the weekend. Pre-market is up to 116.50, 116.70, matter of fact. So we up $16 on Chevron. You don't get that type of move out of energy too often. But yeah, we was in the right space just a little bit early, so it's kind of where we at on that. And let me see, the market getting ready to open. We'll do this. We'll watch the market open on CNBC while I'm talking.
At will?
There was no defense.
There's no defense.
Yeah.
For a country that had prided itself as being...
So, Drake, you can hear me?
IDF's taking targets out at will.
Got a long-standing prison. As long as
You have to leave, bro. I had to take a call right there.
Okay.
It doesn't seem to be in the capital.
No, I was just making sure. Actually, let me pull this up on the other screen.
Celebrating its spin-off. We'll talk to the CEO, Jan Janisch, in a few moments at the NASDAQ.
There we go.
Highlighting the VanEck digital
All right.
ETF. Jim, as we've been sort of chopping around these levels just south of 6K last couple of days.
Yeah, look, I think that we're going to go back to the discussion with Fed. And
Yeah,
I think it's very hard to go back to the discussion with Fed without
All right.
literally
We'll go to a few of the positions that we currently in.
I just point out that the man has been
Look at those and then we'll jump off. We got an Apple position that we're still in. That's Apple's looking good. As long as we holding it strong above this 200 mark, which we popped above right at close on Friday. I think we can hold it. If we hold steady above this 200 and continue higher, if we continue to close the end of days above the $200 strike, I mean the $200 price on Apple, then we should continue higher. We'll see how that one plays out. We got up this morning and then we got a little pullback. Look like McDonald's is taking off, not taking off, but we gaining some momentum on McDonald's.
I think we'd all agree with that.
I was looking at the price on those, but we actually ain't looking too good on the daily.
I mean, you know that to be the case because it
We got a nice pop.
Yeah,
Yeah, we got a nice pop this morning. That's good though, cause we can continue that momentum.
Comes back now as well to the interest costs in the budget, which is certainly an important
On the McDonald's position.
No doubt about that.
Yeah, I like that gap
would
up.
be reduced were there to be lower rates, at least potentially.
We could go ahead and retest, or we can fill this gap and then continue higher.
Short end, yeah.
We'll see how that plays out. I like McDonald's position though.
We really do.
So are you going to start bad-mouthing Jerome Powell too now?
No, you see, I don't
Google
think you can badmouth. I don't think
is
you can
here.
have a debate.
Google down $2. Yeah, Google still struggling. I only got one contract
I do think that
on
there is
Google.
mortgage rates are
I'm gonna
too
just
high
sit and
for
see
what America can afford.
how that plays out. They definitely oversold on the RSI. They haven't been this low since May, and then before that was April. So we ready to round up on Google. I don't want to go too heavy on that position because I already got the other positions in Apple and McDonald's, and I'm not really trying to go heavy in the market right now on calls. I want to stay light and trim when I can because of how high we getting on the S&P. We about to retest those highs. We retest those highs, I'm probably gonna be pulling out a lot of these positions because they should be in profit. I think Drake was watching Tesla. Tesla is at up 12. Damn, they was only up like a couple of dollars before open. To be honest though, right where it's at wouldn't be a bad spot to scalp puts. Like if anybody can scalp puts right now on Tesla, this is not a bad position to do that. How we outside of the bands right now in this first 5 minutes. Yeah, we're probably gonna creep back inside of that. We already did on the day on the 1 minute, so be cautious now. But at open, when we outside of these bands on the 1 minute chart at 336 and 335, you can catch that move back down here to 331. That's a $5 move at open.
They want these auto tariffs off. They don't want any.
Yeah, but people forget that July 9. I mean, there are going to be some tariffs. Market piece in the journal today about Florida tomatoes. Someone wrote,
Yeah, see at open when in the first few minutes when we riding outside of the bands, this is a nice spot to catch a scalp. Intraday day trade from 135, and they come back down and they get inside of these bands at like 331. That's a nice move to catch. Like I said, once we get inside of the bands, you can't call it no more. You know what I'm saying? You can't say it should go down to the other side. You kind of got to trade from outside to the inside because you know we're not going to stay outside of these bands too long.
You know, I'm going to have to talk to my wife about that. I don't know what the animus there is between you and your wife.
I wouldn't bank solely on Bollinger Bands because that's not even how we look at those. We look at those a little bit different. We look at those along with other indicators. So don't bank just on Bollinger Bands, but they do work.
Report in the Journal about Bank of New York approaching Northern Trust. I can confirm this.
DraftKings. I really wanted to get in DraftKings, man, before it made its run. I was looking at DraftKings when it was down here. I just felt like it was gonna come down further on the hourly RSI. I was waiting on it to come down a little bit lower, but looking at the bands, got a nice opportunity here at the end of this day on Friday where it closed outside of the bands. That was a nice entry point, because it's very unlikely that we would have kept falling outside of this. It's a possibility, but we were more likely to pop to the upside. I'm pretty sure on the lower time frame. Yeah, just sunk kind of low on the 30-minute. Now it's bouncing from the bottom, so yeah, that was a good opportunity.
Remember, this kind of business is really a digital business,
Right.
and these two are incredible at it. And people know that they run these big.
So for now, it looks like the market's staying flat, indecisive about how we're gonna react to the Israel-Iran deal. I think what they're trying to do is make it like we just eliminated a major threat to not just our economy, but all the countries, with Iran potentially having a nuclear weapon. So I think that's how they're trying to flip the story to make it to where, okay, he solved the big problem for the world. Just depends. We'll see over time how they flip the story and how we push the narrative. Other than that, I think we good to go, man. We can watch the market. Don't make any rash decisions. Wait on good opportunities, and we'll keep y'all locked in the group. On what we see.
Sort of this area of banking, not the big guys, who conceivably are still capped out.
I don't think we got
Jeffrey's earnings this week. Maybe get a little more canaries in that.
we ain't got no questions anything in the group, so we'll go ahead and jump off, and then we'll be back tomorrow.
It is a snapshot.